Welcome to Bears in Exile. Today is Tuesday, October the 9th, and this is the market overview. Looking at everything that we look at every single night, just going to get right into it. And starting off with the Dow. So we've been watching the secondaries climb in a secondary reset for all of this. And we didn't know when it was going to end, just that it was getting closer, and it was getting closer. And today, look what happened. 110 points to the downside. Really spectacular. 100 points to the downside, spectacular. Yeah, I know. That's seems like a lot nowadays, right? And back when we could do 200 points to the downside or 300 points to the downside, I mean, this is just a little baby. But in the market we've become acclimated to, this feels really big. And so great. We got a downtick today. The downtick was resolved intraday. Very, very impressive. And the secondary reset appears to be finished. So fantastic. Stochastics pointing down, doing their rollover. 14-day RSI moving average just barely getting started to the downside. Down on the CCI, down on the RSI, down on the histogram, and down on the MACD. We noted last night that we would think that the MACD would come up and not cross the trigger point, that it would fail. It's exactly what happened. So, right on. Very nice. And absolutely bearish for the daily time frame. Absolutely. Are they going to try to catch it right here around 13,400? That is the entry point to the long-term moving average bar. It would seem likely that a catch will be attempted at that time. I mean, maybe they could try to catch it a little bit at the open tomorrow, but ultimately, that 13,400 level definitely should be tagged. Definitely. Look at these suckers. All of them have room to move. All of them. So away we go. Fabulous. 60-minute time frame. Are we overdone? Are we overcooked? Well, we have the 14-day RSI moving average moving to the downside. Plenty of room to move. Stochastics locked low. RSI low and pointing lower. Barely up. I would just consider this choppy on the MACD histogram. MACD itself locked low, pointing down. Only a little bit of recovery on the CCI. Yeah, there's a little bit of a blip in the heat map. This isn't major yet. So, I mean, you did have a blip here, but it did work itself off a little bit. I'm not really concerned about that. 60-minute time frame, definitely bearish. And what can you say? Closing at the lows, absolutely bearish. And there was news after hours. They had Alcoa, which was, in my opinion, a miss. Although it didn't really move after hours. You had Yum report, and they actually surprised with a beat. They were doing good after hours. And you had Cummins say they're going to cut 1,500 workers. They're saying that Chinese stuff was bad, cutting their outlook. Absolutely terrible. That is going to have a really big impact come tomorrow. So futures down right now. And matter of fact, I just saw something about cities in where was it? In California being re-reviewed for credit worthiness. So absolutely terrible. 13,400, first stop on the journey down, and beyond that, be looking at about 13,300, and ultimately 1,300 on the dot. That's what I'd really be looking for, and retest of the 200-day moving average. That sounds wonderful. Look at all that room to move. Lots of money to be made. So I like it. I don't know how they would save it at this moment, but we shall see. And going on to SPX. Oh yes. Been watching this as a possible ascending channel. And today busted out of it in a very spectacular fashion. Down 14.5 points, 1% total. And look at that. The secondary corrective move is over. Definitely. We had the downtick yesterday. It was resolved today. Excellent. And everything moving down just like the Dow. Bearish on the daily, bearish on the 60-minute. No need to rehash. We had noted last night that and the night before, SPX not as high as the Dow. Something wasn't jiving. And moving on to the VIX. Very cool. And what do we have? Big green bar clearing the long-term moving average bar in one fell swoop. Fantastic. And doing it the correct way, not jumping through it, not gapping through it, none of that nonsense. Doing it the right way. So that is absolutely wonderful. And we have everything moving up. Everything moving up. Definitely bullish. No need really to look at the 60. I'll just keep moving on. TNA. We were saying that this one sitting on long-term moving average bar, it would at the very least cause compression, and if we were lucky, it would penetrate into it. It certainly did that today. I mean, impossible to know that it was just going to go like that to that extent. But regardless, extremely nice. Beyond that, everything moving down. We've been watching the 14-day RSI moving average on its journey down this entire time. We were watching for a secondary reset, and what can you say? It's good. It's really good. We talked about filling this gap right here, which it has not done yet. It would seem logical that it will attempt to do so. And beyond that, if it gets through there, then we'd be looking at this level right here, down here at 54 to 55. Excellent. Now this one has more development as it's so far into the long-term moving average bar. We should look at the 60-minute time frame and see if it is overcooked. And what do we have? Well, stochastics lock low, 14-day RSI moving average going down to meet them, a little bit up on the CCI, a little bit up on the RSI, a little bit up on the MACD histogram, and still down on the MACD. This one does have more development. This cycle of its down move is more cooked in. Can have some more to the downside, obviously. 14-day going down to meet the stochastics. But at that time, if it doesn't become locked low, it'll be time for it to move back up. So there is less time for TNA to make a, huge move down. It's already ahead of everything else. And going on to the USO oil, since I don't have XLF anymore. Don't know why that is, and probably should have checked that out why, but it is what it is. And we can see that everything is trending on up. MACD, histogram, RSI, stochastics, CCI. Very interesting. Getting to the long-term moving average. Long-term moving averages, which are a flat line at this moment, making it easier to pierce and travel through. Reaching them and backing off. Getting almost to the lower price consensus level for the new month. Very interesting that this is moving up while the market is moving down. Very, very curious. Normally that is not the way that it works. So for that, I don't really have a good explanation at this point. It could be, I suppose, that gas prices in California are so bad that oil for the moment is being viewed negatively. That is possible. And UUP, the dollar. Excellent, excellent. Check this out. We talked about this being the level of resistance. Tagged it once here, tagged it twice here, pierced it on the third time here, and thought that fourth time would be a charm. It came down. We said if this was the turning point, it's very good because it would be a higher low pivot, and that you'd have going up here, going down here, and then back up here to an unknown level. It's exactly what is happening. It closed above, for the first time, that resistance level. Excellent. And bullish. It is getting to resistance in the form of the long-term moving average bar, upper price consensus level, but 14-day RSI moving average moving on up. We've been watching that this entire time, even in the down move. We said, excuse me. We said that once the secondaries finished resetting themselves, they would join the 14-day and move up. That's exactly what's happening. CCI up, RSI up, MACD histogram up, MACD up. Definitely bullish in the daily time frame. And since we're should be hitting resistance very shortly, 60-minute time frame. Is it overcooked? Well, topping area in the heat map, short-term topping area, so problem. Down on the CCI, trying to go down on the stochastics, 14-day RSI moving average running out of room but still pointing up. Slightly up on the RSI, slanting down on the MACD histogram and up on the MACD. Yes, it's running out of time in the 60-minute time frame. It needs a rest or a slight move down. With any luck, it'll just be a rest, but we shall see. And FXE, I know we haven't been watching this one too close lately, simply because we've been watching the dollar, and this has been unnecessary, but very interesting. 200-day moving average daily time frame coming right into it. Closing below the major price consensus level for the new month. So close. Aligns just right with the long-term moving average bar. There should be some resistance here or some support here to catch this. You can see this in the past. So it's already been pierced a few times. It should not be as strong as it was before, but it should be attempted to catch the price. Beyond that, 14-day RSI moving average moving down, stochastics moving with it, CCI going down, RSI going down, MACD going down, MACD histogram going down. This is very, very bearish in the daily time frame. Should be caught, corresponds perfect with UUP, at least for a very, very short-term catch. I would love to see some penetration into here. Fill this gap here. Fill this gap here. Needless to say, if you get a gap fill at this point here, massively bearish for the market, and good for the bears. CompQ, the NASDAQ. Oh boy. Look at this puppy. We're talking about it falling out of the possible ascending wedge last night. Closed below the major price consensus level, bearish. And just dropped like a rock today. This was a level here that should have been attempted to be caught. It didn't. Fell right through it. Means that right here should be the next spot, right about 30.40, just above. And notice where it stopped. Very interesting. Major price consensus level from last month. Kissed it, backed away very, very slightly. Everything moving down. Definitely bearish in the daily. And Apple. This one was just getting beat, as we looked at in the video last night. We now have further development of a short-term, actually, maybe not even a short-term, of a bottoming area. We have a hammer, bottom of a range. Could be caught here. It certainly was bought aggressively from its low of the day. And while everything is ticking down, everything is running out of time. CCI below the 100, stochastics, 14-day RSI moving averages at the bottom of a channel, RSI going sideways, bottom of a channel, very low on the MACD histogram, very low on the MACD. Yes, the question will become, can it bounce, get sucked back into the long-term moving average bar, or does it go sideways, or does it go down, but more likely up or sideways. And that we just don't have enough information on yet, but realize we are running out of time on Apple, if time isn't up already. And GE, fascinating. Got the downtick last night. That was a big deal. Today, downtick target was met. Boom, one day. Getting below, closing below the middle Bollinger Band. Lots of room to the long-term moving average bar. The rule states, get a downtick target move completed. You have to see what it wants to do next. But when it goes down, normally it is a retest of the long-term moving average bar, in this case, which aligns with the major price consensus level for the new month. Completely makes sense, aligns with the bottom of this big green candle, which we know, well, the shadow of the big green candle, which we know is, in this case, support. So actually it should be this area here and this area here. Second one being stronger. And everything moving down. Everything moving down. First day downtick of the 14-day RSI moving average, down on the CCI, down on the stochastics, down on the RSI. Bearish cross completed on the MACD, down on the MACD histogram. Very bearish in the daily. Ouch. And going on. Forever onward. JP Morgan. Largest bank, most important bank, we have a tell. Downtick today. Downtick gives us a target, not far from where we are now, just above 41, but nonetheless, it is a downtick. 14-day RSI moving average moving down. Secondary reset almost complete, kind of stalling a little bit. Fast stochastic down. CCI going sideways, RSI down, MACD down, MACD histogram down. Bearish chart, we have a target. Excellent. Not good in the short term for the overall market. How about that? And XLF, the financials as a whole, look at that. Downtick. Boom. Gives us a target of about 1586. And attempting to roll over in the stochastics, down on everything else. Bearish daily chart. Excellent. And why not? GLD, gold. Haven't been covering gold very much. Just hasn't been interesting. Today, actually yesterday, nope. Yesterday, downtick target not met. Downtick target met today. 2 days into the 4-day potential move. Excellent. Everything moving down. Everything. And that jives just right with the move of the dollar. Love it. And that's going to do it for tonight. As always, all investing decisions are your own. This chart and video for entertainment, educational, and consumption of time purposes only. Thank you.